Market stage a smart intraday recovery. All major indices rebounded more than 1% from the day's lows, with the Nifty closing above 25,750. Nearly 40 Nifty stocks ended the day in green.
Lemon Tree Hotels unveils a restructuring plan. It will separate its asset-light management business from its hotel ownership portfolio. PE giant Warburg Pincus to invest 960 crores for 4% stake in Flora Hotels, an arm of Lemon Hotels.
Sergio Gore takes charge as the U.S. ambassador to India, says the next call on trade talks will take place as early as tomorrow, terms India an essential partner. And welcome to Markets Forward, your go-to show where we aim to get you all of the key data points to gear up for the next trading day. I'm Ritu Singh, and joining me from the Mumbai newsroom, studio is my colleague Ekta Batra. Hi Ekta, what a day it's been, starting from the kind of lows that we saw and then the Sergio-led surge in the markets.
Hi, Ritu. Yes, absolutely. It was, a fantastic day for the markets. What a recovery we did see post that speech which came in from Sergio Gore about the India-US relations. So we did have the market, so we did have the Nifty recover to a gain of around 106 points. Remember that we were 300 points off the day's low in today's trading session. Overall, we did have the mid-caps which lagged a little bit, but they did catch up by the close of trade. But overall, we had the Nifty, the Sensex and the Bank Nifty, which ended in the green quite smartly. But let's tell you what we have lined up and in store for you today with the top movers and shakers. We're going to start the show with that. Vivek will be here to tell us more on that. We'll get you details of the Lemon Tree Hotels restructuring plans, export data of CDMO players, and a slew of news-based stock reactions. But that's not the least. We will delve into the key market events to watch out for in tomorrow's trading session as well. Well, it was a great day for the markets, and we did have a lot of stocks which are moving in today's trading session, especially post-noon. We have Vivek joining in from the big wall to tell us about all the top movers and shakers today. Vivek.
Well, thank you so much for that. What an intraday recovery that we saw, after seeing a significant deterioration as far as the advanced decline ratio was concerned. Post those comments, you actually saw a very sharp improvement. Ended the day sharply higher with a sharp recovery across all of the key indices. In terms of individual stocks, what is it that we are tracking? Well, from the broader end of the markets, IFCI, after a while, this particular stock on very strong volumes up over 15%. Coal India has been in focus, has been an outperformer in the last few trading weeks, and this on the back of the fact that a few of its subsidiaries, one already has an IPO underway, and a few other subsidiaries too are going the IPO route, leading to value unlocking. Manappuram Finance, a very sharp fall that the company saw, or the stock saw on Friday, post the management commentary and clarification. This particular stock recovered quite smartly today, almost 3% higher. BSE, it has been a significant overhang, the fact that there could be some amount of curbs as far as expiry trading is concerned, but the SEBI chief's commentary is something that assuaged investor concerns among the top mid-cap gainer today and saw a spurt, especially in the last half hour of the session. Premier Energies, one particular name from the solar PV module as well as cell space. Remember, over the weekend, you did get news coming in from China that said that they are going to go ahead and cancel value-added tax export rebates. Premier Energy, with certain amount of export exposure, one of the key beneficiaries from that particular move. On the other hand, quite a few laggards, weak commentary coming in from a Delhi-based or North India-based real estate player, led to quite a bit of a sell-off across most of the realty names, Godrej Properties, Prestige, GLF, all of them under pressure today. Capital goods stocks, significant selling pressure. Quite a few of these names have witnessed de-rating. Look at names like BHEL, GVT, and D, Siemens Energy. Most of the capital goods names are under significant pressure today. And lastly, Tejas Networks, a very muted Q3, and that particular stock too saw quite a bit of a sell-off.
All right, Vivek, thanks very much for taking us through that exhaustive list. But one share in focus has been Lemon Tree Hotels that rallied after unveiling a restructuring plan to unlock value and to raise capital. And this also includes the creation of two separate entities and the induction of Warburg Pincus as a strategic investor. Mangla Malu joins us now with more details on this deal that has transpired that we told you about on CNBC-TV18 first. Mangla?
Well, the company has done three things. One, it's announced a restructuring, a value unlocking and fundraising, all of them together. So what Lemon Tree has basically essentially decided to do is that own two companies, by and large listed companies. One of them will be Lemon Tree, which will be a pure play asset light model, which will earn management fees and earn money from the brand platform. The second one will be Fleur Hotels, which will be a hotel ownership platform with development capabilities. Currently, Lemon Tree holds about 58% stake in Fleur, and the rest is owned by APG. Warburg will go ahead and buy APG's stake and will have the option to further invest 960 crores in multiple tranches basis when the need arises. The scheme is a three-way scheme of arrangement. One, Lemon Tree will merge two of its wholly owned subsidiaries with itself. Point two, Lemon Tree will give 4 of its subsidiaries to Fleur, in return for which it will get Fleur shares. And the third part is where Lemon Tree will transfer 12 hotels, including the ones which are under construction, to Fleur Hotels, in lieu of which Lemon Tree shareholders directly will get Fleur shares. So what this basically does is gives you two companies. One is Lemon Tree, which will have up to 170 crores of revenues and 70% plus EBITDA margins, a debt-free, high ROCE business. And the other one will be Fleur, which will have access to over 4,000 hotel keys and roughly 41 hotels rather, and 1,189 crore revenue with 43% margins. So there'll be two distinct companies which will be listed in the next 12 to 15 months. More importantly, once this happens, the board for Lemon Tree will also meet to announce a dividend policy which will continue to reward shareholders.
Okay, all right, Mangalam, thanks very much for that. Speaking to CNBC TV18, in fact, Vishal Mahadevia, the Asia head of Warburg Pincus, has said that the company wants to cater to every Indian consumer who aspires to buy premium products with good value.
I think there will be two distinct entities because two have very different capital needs. And really someone with our capital and the scale of our capital should be in the asset-heavy entity to help them continue to grow where capital is required and us to come in. And there is a asset-light business at Lemon Tree that will continue. And both will really continue to thrive side by side as they become public companies in India.
All right. On that note, let's go across to our guests who are standing by. We have Ambrish Baliga, who's an independent market expert, and we also have Jay Thakkar, who is the head of derivative and quant research at ICICI Securities. Gentlemen, thanks very much for joining us here. Ambrish, to begin with, any view on Lemon Tree Hotels and this deal, and what kind of opportunity you see here going ahead?
No, I think this deal is quite positive for the Lemon Tree shareholders because finally you'll have two entities. Typically, the hospitality companies with an asset-light model normally get a much better valuation. So, that's one positive. And number two, the asset-heavy entity clearly has strategic investors with deep pockets, which is what is required. So I think overall it should be positive for the shareholders. And like I was saying sometime earlier in the earlier show, I think the upside could be either 15 to 18% from here.
Okay, all right. We do have Nagraj Shetty joining into this conversation. Nagraj, have you looked at the technicals of Lemon Tree and what would you assume the charts would do now?
Hi, Ekta, good afternoon. Yes, rightly said, we have seen some bounce back. The chart pattern is not that convincing at this point of time, though it has bounced back from the lows of around 145, 147 levels. There is a strong resistance place around 160, 162 levels. Bounce back till 160, 162 is likely. After that, we could see the stock prices coming down towards 150, 155 levels in the near term.
Well, Nagraj, very quickly, just a view on, how you train the indices going forward. I mean, with the kind of sentimental upmove we saw in the second half of the trade today, how do you expect that to hold up, say, your targets for the near term?
Yes, the way market has recovered from the lows of around 25,500 after a sharp decline is indicating a formation of important bottom reversal, at least for the short term. We have seen some sharp decline from the new all-time highs, and the way the market recovered, I'm expecting we could see some similar kind of upside on the higher levels in the near term. So 26,000 is going to be the immediate resistance for now, and I'm expecting this resistance to be taken out, and 26,200 to 300 is going to be the next target once the 26,000 takes away on the upper side.
Okay, all right. Well, let's move on to the other big story we're tracking. The Indian government is considering scrapping restrictions that bar Chinese companies from bidding for government contracts, according to a Reuters report. However, sources say no final decision has been taken. Vinny joins in with details. Vinny, which Indian companies do you think could be impacted if in case the restrictions are done away with?
Hi, thank you so much for that. Yes, so firstly, let's just take a flashback in terms of what happened last week and why these stocks had fallen. Now, according to a Reuters story that came in, that Finance Ministry was planning to scrap the 5-year-old restrictions that are there on Chinese firms. These restrictions came into place in 2020 on some of the power, railway and other sensitive government contracts. Then, obviously, CNBC confirmed with some government sources as well. They said that no decision was made as yet. But before that, the stocks were beaten down already. And then, despite this notification coming in or the clarification from sources that came in that, there's no decision yet taken on this front, still the stocks were falling. Even today, we saw the stocks falling in trade. Now, Renu Baid of IIFL, what did she say? She said that no government notification is there as of now, even till date, in terms of lifting these restrictions. Channel checks are suggesting that TBEA, which is a big Chinese company, they have been approved maybe for participating in high voltage reactors. So only a specific product, maybe where they can start participating in these government contracts. She also highlighted that, even if this comes through and TBEA is there and participating in this contract, she's not expecting a lot of impact in terms of the performances of our Indian companies. So not much of a worry. She doesn't expect much of a change or fluctuation in terms of pricing as well, at least in the near term. Now, apart from that, what we also had is a lot of other brokerages wrote about this. They said that the relaxation may be more segment-based with prior requirements, part that they want to participate in a government contract by these Chinese firms. It's not going to be a blanket rule that the restriction is lifted for all Chinese firms or even across the board in terms of transformers or in terms of reactors, not across a blanket rule. So maybe negative impact could come in for something like an L&T, BHEL, GE, Vernova, TND, Hitachi Energy, Siemens Energy, and that is why we've seen a bit of a fall coming in these stocks in the last 3 trading sessions. But that is something that we'll be keeping an eye out on, whether this actually comes in terms of any notification.
Okay, all right, Vinny, thanks very much for that. Maybe we can just get a quick comment in from Ambrish about these capital goods stocks. And Ambrish, how would you approach the likes of L&T, BHEL? Do you think that it's going to be factored into earnings soon enough?
No, I mean, the way I see it is it should be an opportunity because, again, the reason these stocks are falling is because investors are assuming that there can't be any smoke without fire. So something could be brewing. But like you're just discussing, I think it could be just be a very narrow window for these Chinese companies, may not be across the board. So I believe that it should not really affect the sector too much. And in case we see a further correction from here, maybe another 5-10%, I think that's a buying opportunity.
Okay, all right. So that's on all of these capital goods stocks. But one space that I've been watching is Divi's Labs and Laurus Labs and a lot of these CDMO companies. They did release data for exports. Now, the Q-on-Q export data for Q3 of FY26 looked a little weak, or it didn't really mention Laurus Labs as well as Divi's Labs. So Concord Biotech, for example, was up 25% on a Q-on-Q basis. Piramal Pharma up 11%. Blue Jet Healthcare was up around 5% year on year. Blue Jet was down around 19% in terms of exports when it comes to CDMO. Piramal was down 15%. Laurus Labs was up 41%, so strong growth there. Gland Pharma was up around 24%, and Concord Biotech was down 27% in terms of export was up 27% in terms of export data. Now, 9 months FY26, Laurus Labs looked good again, so it was up 71%. Divi's Labs and Blue Jet, their export data was strong at around 15%. Concord Biotech was flattish. So December 2025 overall, however, witnessed a mixed performance. Divi's saw a good rebound. It was up 55%. The likes of Gland was higher. Newland Labs also gained, and Piramal Pharma was also higher. So overall, I think the street was a little worried about the Q-on-Q export data, which looked maybe a little sluggish for the likes of a couple of these companies, whereas it looked good for the likes of Concord Biotech, Piramal Pharma, and Blue Jet Healthcare. But nonetheless, wanted your thoughts, Ambrish, on a couple of these CDMO companies, because, Q3 is expected to be a little challenging for them. in terms of earnings simply because of the lack of innovation spend in the US. What's your sense?
No, I don't think there should be an issue longer term. I think just 1 or 2 quarters, there could be a bit of an issue. And in case we see correction, then should be a buying opportunity. But something like a Laurus Lab, which, where we have seen a very good move in the last 6 months to a year, I think it's a good time to at least book some profits and possibly buy into stocks like Divi's or Gland, where Gland Pharma I still see at least at the 400, 500 rupee further move from here.
Well, Nagraj, any view on these IT companies? We're going to see them report numbers soon. TCS is one, HCL Tech later, and then later in the week, Infosys.
Yeah, I think chartically, all the three stocks are placed very well at the lower levels. We have seen some moderate downward correction in the TCS from near the hurdle of 200-day EMA, somewhere around 3,300. I think nothing has changed significantly over the last couple of weeks, placed at the consolidation mode. And I'm expecting further upside from here on out. Chartically, the overall trend of these stocks are looking positive, and I'm expecting more upside in the near term.
All right, that's a sector we'll keep an eye out on. But stocks such as Manappuram Finance and Shakti Pumps were also buzzing in trade today on the back of some stock-specific news flow that came in. Vivek Iyer is joining us now to break down what's driving the action in these counters. Vivek.
Well, that's right. We've taken 3 stocks on the radar today, stocks that are buzzing on the back of news flow. Some relief coming in. First on the list is BSE, quite a sharp up move. Important comments coming in from SEBI chairman where they said that no action or no change in derivatives market, at least for the time being. And along with that, some positive commentary coming in terms of the NSE IPO, giving a sentiment positive as well. The other stock on the radar is Manappuram. The company has gone ahead and denied the report of another agency that said that RBI has raised concerns with respect to the Bain Capital deal. They say the report has been denied, factually incorrect, as well as speculative in nature. And the last stock on the radar is Shakti Pumps. The company went ahead and told the exchanges that they've received orders worth over 650 crore from the Karnataka Renewable Energy Development Authority. Remember, the order book at the end of Q2 was 1,300 crores, and the company has announced orders worth almost 1,900 crore just in the last month. So positive news flow coming in for these names.
Okay, all right, Vivek. Thanks very much for that. So lots of stocks buzzing around in what was a good session for us by the close of trade. Amrish as well as Nagraj, thank you very much for joining in and taking us through all of your opinion for today's trading session. We're going to take a short break, but up next we'll get you all of the top corporate voices along with key market events to watch out for. Stay tuned.
Welcome back. TCS Q3 numbers breaking for you on the screen. On the bottom line, the company has delivered 10,657 crore. That is a decline of 11.5%, almost 12% on a quarter-on-quarter basis, coming in lower than street expectations. But here, the miss appears to be on the back of an exceptional one-time loss. There are three key, just prima facie, it looks like an exceptional loss of nearly 3,400 crore rupees, which is courtesy one, restructuring expenses of 253 crore. I can see a statutory impact of the new labor codes of about 2,100 crore. And finally, there was a provision towards a legal claim. Perhaps this is to do with an IP infringement case, and that has impacted the bottom line by nearly 1,000 crore rupees. So there is an exceptional item which appears to have dented the company's bottom line. On the revenue, revenues of the company have gone up by 2% on a sequential basis. That seems to be slightly ahead of street expectations. Bottom line, lower, declining 12% on a sequential basis, but there is an exceptional impact. The company has said there are three key reasons. A small one is a restructuring expense of about 253 crore. Statutory impact of the new labor codes is a big one, 2,100 crore, and a provision towards a legal claim. Even in the last quarter, there was an exceptional loss of 1,135 crore, and that was on account of restructuring of the employees. Remember, TCS about 6 months back had announced that they're letting go of a few employees, and that had resulted in the restructuring loss in the previous quarter, and this time it's the new labor code. We have with us Sandeep now joining in. Sandeep, you want to quickly comment on this exceptional? Will it take the street by surprise?
No, I think, this was known that, because of this new labor code, many of the companies in IT and bank will have some kind of provision, which will have an impact of one time and also a recurring piece. So I don't think this is a negative surprise. I think at the EBIT level, the company has delivered broadly in line with estimate, and even on the revenue terms, as far as we can see the rupee revenue, it is broadly in line. So we need to see the dollar and constant currency numbers, number one, and number two, the deal wins. So these two numbers probably will be very important. And also if they can, they are going to declare anything on the AI revenues. I think that is going to be critical.
Okay, on expected lines, the legal claim is on account of the IP infringement case, which is related to Computer Sciences Corporation, CSC. This was also a known that the company is likely to take an exceptional one-time hit at the bottom line. That the company has accounted for about 1,000 crore. The EBIT margins have come bang in line with street expectations at 25.2%, unchanged on a sequential basis. We still don't have the constant currency revenue growth, but it's likely to be a fairly muted quarter. In the prior quarter, the company's top line had gone up by 0.8%, and currently consensus expectations are for a growth of about 0.3%, 0.5%. So it's going to be a slow quarter on the back of seasonality. But as we begin, Sandeep, 2026, the geopolitical noise has gone up so much, whether it's to do with Venezuela, whether it's to do with Greenland. So the question is that with this kind of geopolitical headlines that we're dealing with every single day, January, February is the time when clients typically set their budgets for the full year. Now with so much uncertainty looming, do you think discretionary spending further takes a hit?
No, so I think, it is the beginning of the year, and generally, it is just a few days of the month, and many of the clients would not have finalized their budgets, or even if finalized, they would not have communicated to the company. So I don't think any company will be able to give a clear guidance on how much client is going to spend. But broadly, because of AI and reduction in efforts, I don't see a big jump in budgets will be there for any of the software service providers this year. That broadly is, I think a known fact. So I would not be expecting a big positive commentary on that side. This year, CY26 will be broadly, flattish kind of year, maybe 2-3% growth here and there. That's it.
Okay. The company's total contract value stands at $9.3 billion. This compares